Welcome to The Explainer. Today, we're digging into a question that honestly trips up almost every new entrepreneur out there. When exactly does your brilliant idea become a business in the eyes of the tax code?
I want you to think about this for a second. Maybe you just snagged a new camera for that photography side hustle you've been dreaming up. Or hey, maybe you finally paid for that domain name for your new app. Could that one single purchase mean you're already in business?
Look, this isn't some weird niche problem. It's something tax pros see constantly. We heard from Kalunji Murray over at TaxAssurances, and he said, I recently met with a photographer who was just starting out, and he was wondering at what point does he really have to start doing tax returns. Sound familiar? Yeah, I thought so. We're going to use his story to walk through this.
All right, first things first. We have got to bust a huge myth that gets so many people twisted up. Let's talk about the incorporation myth.
So many of us believe that you don't really have to worry about all the business tax stuff until you've gone through the whole rigmarole of setting up an LLC or an S-Corp, a formal company. A lot of people just wait for that official piece of paper before they even think about tracking anything.
So let's just lay it all out. The myth says you need that formal structure, that LLC, to be in business. But the reality? Oh, it's so much simpler. The real trigger is just financial activity. The second you spend or earn your first dollar for your venture, the clock is running. It's not about the paperwork, it's about the money.
Okay, so if getting that fancy LLC isn't the starting line, then what is? What is the actual moment that your tax journey officially begins?
And here it is, the answer. The expert says it all right here. What really dictates whether or not you need to do a tax return is if you start making money or if you start spending money related to that business. It truly is that straightforward. The moment money moves, either in or out, that tax clock starts ticking. Bam.
So when we talk about spending money, what we're really getting at is this crucial idea, the business-related expense. This is basically any cost you have while you're getting started, running the show, or trying to grow. And here's the most important part. These expenses can be written off, which can lower your tax bill later on. Okay, let's stop talking in hypotheticals for a minute. Let's go back to our photographer friend and see how this actually plays out in the real world.
Now remember, this guy hadn't booked a single client yet. He hadn't made one dime. But, and this is the big but, he was already spending money to get his idea off the ground.
I mean, check this out. Of course there's the new camera and all the gear. But what about the Ubers he took to scout for cool shoot locations? Or maybe he rented a small studio space just to test out his lighting. He even helped a model out with her travel costs so he could build his portfolio. Every single one of those, that's a business transaction.
And here is the absolute key takeaway. He doesn't have to wait for an LLC or his first paycheck to start keeping track of all this. Every single item we just mentioned is a valid, legitimate expense that he has the ability to write off. That's real money that can go back into his pocket, but only if he's on top of it from day one.
So this all leads to the big question, right? Now that you know the trigger, what do you actually do? What is your very first practical step?
It really just boils down to this simple three-step process. Step 1. You spend or you earn your very first dollar related to your business idea. Step 2, you have that aha moment and realize, okay, this is the trigger. It's on. And step 3, from that moment forward, you start tracking absolutely everything, every expense, every bit of income, no matter how small.
So I'm going to leave you with this thought. You've spent that first dollar on your new business idea. Maybe it was yesterday. Maybe it's tomorrow. What's your plan to track it?